please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, it's been a good day for the market. 10,766 on the Nifty and 220 points higher on the Bank Nifty. Even the mid-cap index has recovered quite a bit in the green, though advanced decline still remains in favor of declines. BTST Times, buy today, sell tomorrow, could be reverse as well, of course. Ashwani and Mitesh with us for that. Ashwani, you go first. On the index, you've already told us that you may want to carry, but what about individual stocks?
See, individual stocks, Escorts a buy with a stop of 870, target of 895. Balkrishna Industries a buy with a stop of 1120, target of 1165. And today Bajaj Finserv has done well, not so much Bajaj Finance. So I'm hoping that maybe today or tomorrow this one should also start to make a move. So this is a buy with a stop of 2300, target of 2420.
Okay, Mitesh, let's come to your calls. I mean, it's lots of green on the screen for now. What are your stocks?
Yeah, I think, obviously, while Anuj was saying it could be STBT, I don't think, today you would want to take some short positions. In fact, yesterday also we didn't have any shorts. Apollo Hospital is a buy or BTST with a stop at 1065 for targets of 1105, and Bharat Forge, I think, is moved up slightly. Try to buy it around 630 with a stop at 620 for targets of around 650. Okay, those are some BTST calls. Amrish, Ashwani just recommended Escorts. That's corrected quite a bit from 1,000 to 880. There's again some speculation that there also perhaps there's been some selling and perhaps that could be coming to an end.
Right.
Your thoughts on the stock?
No, I think it's a great opportunity to buy Escorts at these levels because even when the results had come out, the prices are much higher, and even at those levels, we like the stock. Yeah. So especially after this correction, I think people who have bought at those levels, it's a great time to average out. And those who don't have, I think it's a good opportunity to buy because we are looking at a price of about 1150, 1175, possibly in the next 9 to 12 months.
Two more stocks for you, Amrish, because they're defying all kinds of understanding now. One is Dilip Buildcon, which has crashed so badly in this whole mid-cap mayhem. And the second is CG Power, I mean, a stock which comes from pedigreed sort of, promoters and holders. But again, the manner in which it fell and everybody is still waiting for this hungry deal announcement. Your thoughts on both of them?
CG Power, I don't really track closely. But Dilip Buildcon, I think, at least from the market point of view, the story is over for investors.
Why do you say that?
I mean, especially after whatever rumors came out, and we had the management also clarifying. But the serious investors, I don't think, really bought into it. So because of which we have seen a decent amount of selling. And now, I think going forward, at least if you're talking the next 2 to 3 quarters, it's going to be more of a trader stock than, like a serious investor buying into it. Because I really don't see this stock again, going back to those levels of 900, 950. I think it'll be in that range of 100, 150 rupees. Okay, that's a point from Amrish. Amrish, so before we let you go, any interesting stock ideas that you're picking up right now? In fact, I've given my stock ideas since the last 1.5 to 2 months. It's the same things which I've been buying. But again, I think we have clearly said that the pharma stocks have bottomed out, and that's done decently well. And I would still continue to look at the Indian pharma companies. What we had done in the last 5-6 months was we had also bought Glaxo. This was basically to balance out the risky Indian pharma stocks. Now, since we have seen a recovery across, and Glaxo, in fact, has outperformed. In fact, we picked it up at about 2200, 2225. So at the current levels, I think it's safe to book out of Glaxo and buy more of the Indian pharma stocks. So I would be looking at still continuing to buy Lupin, Sun Pharma, and Dr. Reddy's. Whenever there's a small correction, I don't think we'll see a deep correction like we saw in the last 2 years. But even if there's a correction of, say, 5-7%, I think it's a good time to buy into pharma stocks.
Okay. All right, Amrish. Good talking to you. Thanks so much for joining us on the show today. On that note, let's get you some more market opinion. Earlier in the day, we caught up with Manish Sonthalia of Motilal Oswal Asset Management, and we began by asking him for his views on pretty much the stock of the day, Shriram Transport.
Not fair to comment about individual names, but the lending and borrowing business, which is basically it's all about your collection teams in place, and if this company has a specific problem in repayment, it's a company specific issue. But I don't think there's a major issue as far as the credit appraisal process for even this name is concerned. It may be a one-off event, and maybe the markets are just pricing in that bit of information in the current stock price.
For investors, and again going back to PMS investors, because they have now seen some of their NAVs go down 20-25%. What's the call? Stay invested, because I'm sure you will be getting some redemption requests as well. How should you wait through 2018?
So let me unequivocally say that there is no panic as such. There is no panic as such in the PMS investments as such. It has fallen in line with the markets, or maybe, generally what PMS has fallen, we would have fallen much less than that. So that's a true fact. I think people are very understanding. The retail HNI investor is a matured lot than what it was, let's say, 5-10 years ago. They very well understand the risks that are associated with equities, and from that point of view, given that weaker hands are coming off the market, many of the smart investors in the PMSs are also wanting to put in fresh money as opposed to taking money off the table. This is what I understand given the situation over the last 3 or 5 months.
Manish, what would you do with this entire finance space? Just flee to quality, or do you think there is more in the mid-cap space, mid-cap financials?
So I think mortgage finance business, the competitive intensity is just becoming, too much, and it's too high as of now. Spreads are just vanishing, and the risks that have been taken on, associated with the lending, So I think our focus is on to the quality names, the retail franchise of either banks or NBFCs. And we'll just stick to that. I mean, there's no deviating away from this aspect which we have been following for last many years. I mean, no such call on state-owned banks or too aggressive a stance on even mortgage finance companies at this stage.
Manish, you had authored a paper, many years back, I think almost 10 years back, called A Rising Consumer Class. That holds even today. 10 years later, you're seeing a premiumization in the consumer segment pick up quite a bit. Harish Manwani yesterday was talking about how, premiumization and digitization is the way to go in the consumer segment. What are your own thoughts on how equity investors should approach it? Do you continue to buy some of these names, the Britannias, the Pidilites, the Page Industries of the world?
You seem to have done some good work as far as the research and getting hold of that paper. Anyway, I think, consumer is here to stay for next not 5-7 years, but decade, 2 decades. It's all about the middle class, which is going to expand in a big way. Both the discretionary and the staple space are going to do quite well. I think we just got to focus on things where, the distribution or the franchise which has been created by many of these consumer names stays intact. They don't get dwindled or frittered away with competition. They are going to have some pricing power in their hands. That is, the brand equity on the companies and the products stay intact. And the whole aspect of premiumization, the mass market segment moving into the higher bracket, which warrants higher degree of spending and higher amount of spending for the same amount. So from that point of view, I think consumption has a long way to go. Even though we may be saying that there may be not too much of job growth happening in the country, but at the end of the day, today we are officially a $2.5 trillion economy, and per capita income beyond $1,000 all goes into discretionary spend. So both staples as well as discretionary, there's a long way to go due to the rising consumer middle class. Many more cities getting created, moving away from rural to urban. Those are broad themes where we tend to find some ideas where the longevity of growth is beyond many years.
Welcome back. So far, so good. No nerves, no jitters. Whatever rally we've seen, the market is holding on to it. So that's the good part from a bull's point of view in terms of today's trading action, largely positive. A lot of the auto stocks have been in top gear today, and that's really the sector of the afternoon. Maruti, Bajaj, Auto, even the likes of Mahindra and Mahindra, many of these names on the upside. Sudeep Bandyopadhyay is joining in. He's Group Chairman of IndiTrade Capital. Sudeep, good to have you in the studios. So autos are back. The question is, what do you cherry pick? Bajaj Auto, for instance, great numbers this time, a very confident sounding management. Then there's Maruti. Purely from a returns perspective, next 6 months to a year, what would be your pecking order?
Well, I'll definitely go and pick Maruti. In fact, I've been positive on Maruti for quite some time. People were running to buy it around 10,000 levels. It corrected, it came down significantly, and I have been telling investors to go and buy Maruti. It's a fantastic story. If you see June numbers, I think in spite of a planned shutdown, the kind of numbers they have produced, amazing. Also remember that they are gaining a further foothold and strength in the export market. With the way the rupee is behaving, I think that also is going to help Maruti. So Maruti definitely I will buy, and considering the volatility in the global markets, domestic markets, I think that is a very safe pick. Bajaj, undoubtedly fantastic numbers. Finally, Nigeria is working for them. They have been struggling to get the Nigeria thing right, and it's working. It's paying them dividend. Also, rupee depreciation helps them. But between the two, I'll go and buy Maruti just for the stability point of view.
Okay, but by the way, just keep an eye on a couple of stocks which have been weak, like Shrey Infra, for example. You had that one-day rally that was sold into. Today, it's been very volatile, that stock. Just pull out the intraday chart of the stock, shall we? Just look at that. Towards the end, there's been a bit of a pickup that you're seeing. On the other hand, Jan Irrigation is almost making to, it's still in the green, but that's been one of the weaker stocks. So Jan Irrigation is one stock where we are seeing some shorts being taken at higher levels. So it's all over the place as far as the mid caps are concerned. But yes, on the large caps, of course, we've had a big move. Good afternoon, Sudeep. So today the stocks that have moved have been auto and auto ancillaries. Your picks in this space, Balkrishna has made a move. Bajaj Auto is up. Amara Raja, as we were just discussing, in the ancillary space. Anything that you would want to buy?
I think ancillary space, we also should look at Bharat Forge. I mean, of course, it's a fantastic company. They have a leg in the defense as well. And US, the SUV and four-wheeler demands have been picking up. They have a significant market share there. So I think I will definitely look at Bharat Forge. I also like Exide. I think Amara Raja has been doing well, but I think we should not forget Exide. They've been gaining market share. Amara Raja was definitely ahead of Exide in the market war, but now I think Exide is kind of coming back. Also, they have an insurance unit sitting inside, 100% owned. That will definitely lead to value unlocking sometime. For a long-term investor, I think Exide is looking good, can be bought at current level. Bharat Forge definitely is a buy for long-term.
By the way, the stock that's surging away right now is All Cargo Logistics, almost 7% higher. A lot of that gain has come in the last 5 minutes of trade. Promoters bought some equity from the market. They bought almost 0.5% more, and that's obviously usually something that the market likes, and there's some interesting trading action going on that stock. I don't know, any view on this one, Sudeep, if you track it, or logistics overall?
Of course, in fact, it has been one of our favorite stocks for a very long time. Look, I think these guys have done something which was absolutely unique. The LCL segment, less than container load segment, that's the segment which they kind of revolutionized. They have a fantastic business going there. The margins, remember, is much, much higher in a less than container load segment, and that's where they play. So I think we have been, kind of recommending investors to buy this company for a long time, and I think recent correction was a great opportunity. It has moved up a little bit from there, but even now it's a great opportunity to buy. I think about 150 is the right level we are looking at as far as this stock is concerned.
Okay, All Cargo Logistics making a big move. So Ashwani, what would be the verdict for the day today? Because we are still in the middle of the range now on the Nifty. The lower end and top end both have been protected. For how long you reckon we could be in this range?
See, it's sideways. We had a one-day sort of pause and then it has resumed. So basically 10,850 max 900. That's what's going to happen here. I don't see life beyond 10,850 on a sustainable basis.
Okay, well, on that note, we need to take another very quick break. We'll come back and count down to the day's close. It's a green Wednesday on the last trade. Welcome back. 72 higher, and absolutely no sort of issues with the market. Some news on from the RBI. Commercial banks shall obtain enforcement action framework with respect to statutory auditors. Okay, this is really important. It's something that we've been flagging off earlier as well. The RBI basically tightening the screws for auditors who are auditing banks and making sure that there are no sort of gaps or no lapses that kind of fall through. We'll get you some more details on exactly what that regulatory framework is. But in the meantime, for the market, Anuj, I mean, I guess it's so far so good, large cap led. Now, the question is what next, I guess.
Yeah, we're closing about 10,750. One thing which we want to say is that, don't want to extrapolate anything in this market, because also, in the morning we were discussing that today you don't have US market, and that perhaps is the biggest cue, at least for the second half today.
You said that when the cat is away, the mice play, huh?
Yeah, so that happens. Tomorrow morning you are not going to wake up with any kind of shocker. Of course, for traders who only see Dow, they're going to have a sound sleep at least today, not looking at Dow. Tomorrow morning then, take it fresh, take a fresh guard. That way, I think things are quite okay. Tomorrow's weekly options expiry as well on the Bank Nifty. Normally, the move happens on Wednesday, and after that, Thursday is about eating those premiums. That could happen, but I think a large part of this move is also because you don't have the overhang of seeing weakness in US market tomorrow morning. Let's see. Tomorrow could be an interesting day, of course.
We won't have too many tweets. Maybe 4th of July indeed would be a holiday for the US president as well. Just maybe. Well, getting back to the market for the time being, Ashwani, your thought on some of the pharma stocks that have again had a good day today. We've been discussing this even yesterday. We were talking about the pharma rally resuming. Now, between, let's say, a Reddy's and a Lupin, for a positional trader, what would be a better call? Cipla has been relatively weaker today.
See, today exporters have taken a day off, but whatever weakness is there should be bought into, because the pharma rally is restarting, and whenever the techs and the pharmas, they start to come back, the exporters take the lead. Chances are, all of these pharma stocks should again participate. So a positional trader can hold on. A fresh rally is beginning here, also in mid-cap, tech, etc. So today is a good day to accumulate on these exporters. Okay, today is a good day to accumulate on this exporter. By the way, that's a very positive news that you're getting on JP Associates. I think the market was waiting for that because, Ashmit, of course, is sending us all these details. Essentially, what this means is that the JP is telling Supreme Court that please make an exception for us and allow us for our plan. Prashant is helping me with understanding this issue as well. For JP Infra to be considered, and then the remaining money can be deposited. And I think Supreme Court is suggesting a fresh deposit of 650 crores. I think this is something which will go down well with those who have bought JP Associates, Surabhi, because this is, the initial reaction was, of course, on the negative side, but this is what JP would have wanted. And that's why I think I'm not surprised that now the stock is moving into the green, and well in the green now, actually.
Yeah, maybe, the court does allow them for some kind of a breathing space, some maneuverability perhaps, in terms of the timeline of the money that needs to be deposited. Sudeep, I'll sort of ask you a broader question then. JP, I don't know if 16 rupee stock right now, whether you'd have a recommendation, but largely speaking, a lot of the road contracting stocks anyway have declined in the current market correction. How would you view this? And the reason I ask is today was very interesting. We were talking to CMIE, Mr. Mahesh Vyas, and he was actually telling us that for the first time in several months, the spending on roads has actually gone down. That's right. As per their data.
That's right. I saw you guys talking to Mahesh Vyas. I also saw the NCC, the MD had come. And I think there was a little bit of a contradiction. He was saying that the construction activity is continuing. See, I'll tell you, there is a couple of things which is happening. I think the pace of ordering has probably slowed down. But I think the guys who have got the orders, the execution process is going on. And on the overall thing, I'll say that some of the companies, like one particular company which has corrected significantly, Dilip Buildcon, we have been bullish on that. And I think I maintain my stand there. I think it's done pretty well. And overall, the construction space, they have delivered, and they have very little liability on the bank loans on the book. They've got a fantastic order book. So, some of these beaten down companies, I think it's worth looking at. If we believe that the Bharatmala is going to continue continue, if we believe that the construction activity will continue, and I see no reason for that not continuing, the public spending has to be there to ensure the momentum in the economy, and the government will have to continue spending. One quarter, less spending, one quarter more spending may happen, but the trend has to be there of public spending on infrastructure. And companies like Dilip Buildcon and some other companies will continue to ride that wave. So this correction is definitely a good opportunity to buy some of the well-positioned construction stocks.
Okay, just about 2 minutes left for markets to close, so let's do a quick recap. The way things stand, we'll have to say that today was a real good day. Follow-through would be important because, just to reiterate, tonight you don't have US markets. So tomorrow morning you don't wake up to any kind of negative cues, at least from the US, and then perhaps take a fresh card. What helped the market today was that it was essentially a big, large cap driven move, and the bluest of blue chips made a big move in trade today. Starting with Hindustan Unilever, which made a fresh all-time high. It's made a bit of a habit actually. Every month it's made new all-time high. So 1680 on that stock, approaching 4 lakh crore market cap, by the way. So big move on lever. HDFC was up 2.2%. Reliance was up about 2% ahead of the AGM. HDFC Bank was up 1.6%. So this quartet really helped the market or the Nifty. Then of course you had Maruti, which made a big move, 3% higher on Maruti. It will be interesting to see the delivery stats today on Maruti. Bajaj Auto as well up 4%. Pharma showed you indications that it was ready for the next round of moves. So stocks like Lupin, Dr. Reddy's actually ending at the high point. Coal India as well was up about 1%. The drag, not really too many stocks, or at least influential names, not too many were down. HPCL, BPCL were down. HCL Tech was down 1%. Hindalco was down 1%. Grasim was down 2%. Cipla was down 2%. Vedanta 1.3%. None of these stocks actually matters as far as the Nifty is concerned. So what was interesting today was that just on the Nifty, you had 25 advances and 25 declines, even Stevens, but 70 points higher for the Nifty. That's because the largest of the large caps were making a move, Surabhi, and that's why you saw this move play out today.
Absolutely. So leadership coming from the front. Mid-cap index pales in comparison. Actually, the index itself is flat, but as always, it's all about individual stocks. If I talk about the winners, then the pharma move extended to the mid-cap market as well. So, for instance, the Granules is up about 6.5%. Strides Shasun is up about 4%. We've seen interesting buying patterns on Cadila. Last time I saw that stock, it was up 1 to 2%. Let's just get the final closing rates. Yeah, still 2% higher on Cadila Healthcare. So pharma was okay. Interesting day for a lot of the housing finance companies, starting with the biggie India Bulls. But if we move beyond, Repco, Gru, Home Finance, so a lot of these stocks have found interesting traction. In fact, Gru is up almost 4-5%, Repco also around 3%. So housing finance was back in flavor today. TVS Motors, good day for the stock, about 4% up, in step with the auto rally that we've been speaking of. Speaking of autos, let's move forward to auto ancillary. Amara Raja, 2.5% higher than almost every single tire stock, was up and about. Balkrishna Industries leading that charge with about a 4% up move. Bharat Forge, of course, also on the screen when we're talking ancillaries. But Balkrishna Industries up about 5%. JK Tyre, Apollo, most of these names have ended in positive territory as well. Other key gainers would include stocks like an Eris Life, late mover, but 5% up. Again, IPCA has managed a 7% up move. Farmers was very, very strong today. All Cargo has ended with a 5% gain on promoters buying stake from the market. Interesting day for a couple of rice companies, some excitement around the higher MSP. So LT Foods, for instance, 7.5% on the higher side. 8K Miles, by the way, 10% up move today after a 35% drubbing over the last couple of sessions. So that's how the gainers list kind of stacks up. If I talk about some of the key losers, let's begin with the stock of the day. Shriram Transport Finance recovered quite a bit of lost ground, but still ending with a cut of nearly 12%. Tata Coffee undid a lot of yesterday's excitement, 5.5% down. First Source was lower by about 5%. Actually, mid-cap IT wasn't that hot today. Hexaware, NIIT Tech, most of these stocks are flat to slightly negative. Not a great day for the mid-cap tech names. So that's how we have closed out the day. Very flat on the index. More about individual stock movement, Anuj. But I guess tomorrow is going to be all about seeing if we can get the follow-through and the traction. Yeah, follow-through has been missing. Let's get some final thoughts from our experts as well. Ashwani, follow-through has been missing, but the profile of stocks today was quite interesting. The largest of large caps made a move.
See, basically, if you take the bank nifty out, there is no rally. High T was lower, mid caps didn't participate. So if you take those 4 or 5 large banks which moved, it wasn't a market where there was a total bullish view, because the declines were 861, advances were 764. So again, this is an upswing, this time led by banks. But I don't think overall the texture or it really shows that you are heading to new highs. I think another 100 odd points can happen because of follow through from financials, but beyond that it looks really difficult.
Okay, Sudeep, final thoughts from you as well. Looking at the market being so range bound, any individual stocks that you'd like to sort of leave us with?
Well, definitely. I think a lot of interesting opportunities are coming up. If you really look at Maruti, which I've already mentioned, one can look at stocks in the slightly not that large cap, but in the mid cap kind of a space. Tata Chemicals is one stock which we have been looking at. I think it's looking good with the soda ash demand globally going up, and the margins kind of expanding on soda ash. I think Tata Chemicals is good at current levels. We also are looking at some of the interesting names on the FMCG space. ITC looks good at current levels. The FMCG business in ITC is kind of picking up, and I think the valuation gap between ITC and other leading FMCG players, particularly levers, somewhere I think the gap will narrow, and that's the opportunity in ITC.
Okay, Mitesh, final thoughts from you? Mitesh?
Yeah, for me, I think this is a market which remains range, and I think now we are heading towards the upper end of the range. So the bank nifty could see levels of around 26,750, 780 on the upside, while the nifty could head towards maybe 10,830, 850. I think only if we get a signal of getting past that, and we still haven't got that, despite the fact that we've had 2 days of good recovery. I think then we'll look at a trended move, but otherwise this will be a you might want to trade the edges, and you might want to buy on declines around the edges on the indices, but otherwise prefer stock specific way of trading is what I would advise.
Okay, gentlemen, thanks a lot for joining us today and taking us through the market close. By the way, just to explain the point that I was making, 25 Nifty stocks advancing, 25 Nifty stocks declining, still Nifty up 70 points. If you see the contribution plate, HDFC Bank and Reliance, you add these three, that's 51 points. You add a Maruti as well, that's 60 points. 60 out of 70 points came on account of 4 Nifty stocks. And if you look at the drag, Infosys is just about 4 points. So you in cricketing parlance, you had perhaps 3 or 4 batsmen scoring centuries and perhaps some scoring ducks. So at the end of the day, the team score was quite high, and that's exactly what happened in trade today. It was a narrow move because the advance decline for overall market on a day like today was 965 advancing and 1117 decline. So overall broader market was still under a bit of a pressure. It's just that on the Nifty, because you had these 4 stocks making a big move, they accounted for almost 80% or more than that actually of Nifty's rally.
What a day it's been for the top trio of HDFC Bank and RIL. Well, on that note, we will take a quick break. But on the other side, the government has approved a proposal to raise the minimum support price for kharif crops. All the details coming up.
Welcome back, and today of course has been a historical day as the government has put it, as they have approved a proposal to raise minimum support price for the Kharif crops. There has been a detailed maths that has been done onto this one. We of course have seen the MSP rise as compared to the previous year. The government had promised 1.5 times more than the cost of production. So that is exactly what the government came out with today. They also put in the calculation on what the input cost has been as per CACP and how much of an increase in sense of MSP have we seen, and that those final figures also have been put out. What it of course lacks is that there still hasn't been a mechanism that has been put out on how it would be implemented, what methodology would be taken in, and what states are saying about it. But given the credit to the government for that one, we still are some time away from the harvest, and those things would be ironed in the next couple of months. At this time, at this point, of course, it is the MSP hike which the markets were waiting, and they did get it, and the percentage calculations is what we still are doing. On that note, let's also hear out what Siraj Hussain had to say. But before that, Ramvilas Paswan, of course, also spoke to us and talked about the MSP hike, the calculations, and how the government really has gone about doing it.
What the government and Prime Minister has announced, today the government has fulfilled that commitment, and I must congratulate Prime Minister on behalf of on behalf of myself and on behalf of our party, Lok Janshakti Party, that this is the historic step. And if you go to item-wise, paddy, the cost of production has been increased 50.59%. Means cost of production was 1,166 rupees, and we have announced 1,750, 1750. Likewise, jawar, we have increased 51%. Bajra, we have increased 96%. Ragi, we have increased 50%. Maize, makai, we have हम लोगों ने बढ़ाया है, we have increased 50%, 50.31%. Ragi, arhar, tur, we have increased 65.36%. Moong, we have increased 50%. Urad, we have increased 62.89%. Groundnut, we have increased 50%. Sunflower, we have increased 50%. Soya bean, we have increased 50%. Sesame, we have increased 50%. Niger seeds, we have increased 50%. Cotton, we have increased 50.1%. And cotton long staple, we have increased 58.75%. So all these articles, all the food items, we have what we have announced, what the Prime Minister has announced, that it will not less than 50%, 1.105, derguna, 1.5%. We have increased that ratio, and it is minimum, and we have gone up to 96 to 97%.
Right. So then what will be the share as far as center and states money-wise is concerned? Because that is something which the states had discussed in a lot of meetings, and they had pointed out there are 3 ways in which the sharing can be done. Has that been decided yet?
No, I don't know. Now the government has already announced. I don't think that I have not in mind, but government what we have earlier have done, I think that same thing will be done, but I don't know what the adjective you are asking.
Okay, and so what about procurement? How will the government go ahead with that?
No, I have already visited Uttar Pradesh, and in Uttar Pradesh now this production has, procurement has gone up from 30 lakhs to 53 lakhs, and day before yesterday, I had discussion with the state government and the FCI officials also, and we have been decided that wherever the procurement is more, there should not be shortage of any storage, and the step will be needed, that will take.
All right, that's the food minister telling us that, giving out a detailed layout on what really has been an increase in the MSP. But he also said that the other important points like the storage, procurement, funding are the kind of points that have been ironed out as well by the government, and that they are visiting the state governments to ensure that everybody is on the same page. But let's also hear out what Avik Saha, who is the national convener of Jai Kisan Andolan, and also Siraj Hussain of iCryer had to say on their initial reactions on what the MSP numbers really look like.
Any increase is welcome, but we must understand that an MSP announcement by the government does not necessarily translate to an increase in the market price of the product. So what the farmer will get at the agri market is what the farmer is concerned about, and not merely the announcement. While paddy, I will admit, is one of the crops that do fetch MSP in most of the states that grow paddy, for the other crops, these announcements are just figures because there is no procurement by the government. So the government has made an announcement or is going to shortly do so. It looks good on paper.
In 2012-13, also, the hike in paddy was about 15%. But then that was just after a kind of global crisis. So my worry is that if paddy MSP goes up by 250 rupees, then wheat MSP cannot remain behind. When the Rabi MSPs are declared, paddy MSP will also drive the wheat MSP. Inflationary pressure will come only if the market prices rise in sympathy with MSP. That has not happened in the last 2 years, as we have seen. The MSPs have been raised, but market prices have not risen. So if the market prices rise, there will be inflation, and if they do not rise, then the farmer is not really helped.
All right, now the first time that we have seen a price hike like that, and important point really is that the MSP hike may not necessarily translate into a market price increase, as the initial reactions that we have heard from, of course, the market participants. But it's important to know on what the corporates also had to say about the MSP price hike, because many of them, for many of them, actually, this is the raw material, and that actually can change the whole game until the commodity reaches the final plan, or for many firms who are exporting these commodities as well, these MSP price hike is going to be quite a game changer.
It's a very good step. Farmers needed this badly, and it has come at the right time. So it's a very good step, and we must appreciate that. There is going to be some impact on exports if the other countries do not increase the price of their product. They can also increase the price if they feel that India's procurement price has increased, the prices will jump. So if they can take advantage of it and they also increase the price $30, $40, then we may not have impact. But otherwise, I feel there will be impact.
Whatever the MSP has increased, this will have impact on the exports of the non-basmati rice, because, you know, we will be uncompetitive by $40, $50. So that we have to see, you know, how the other part of the world, react to this. So definitely non-basmati will be hit by this. And as far as basmati is concerned, definitely, it will also strengthen the prices of basmati. But that will not have impact on the, export or, India consumption story, for the two reasons. India is kind of, monopoly on the basmati rice.
Current MSP prices are higher than the market prices. Now, if you have increased MSP prices, they'll be much more higher than the market prices. Does the government have the funds, the infrastructure in terms of storage, buying, if the current prices are lower than MSP? At one level, it may just remain on paper, because if the government is not buying at higher prices, or if there is overall price stable in case of oil, it doesn't go up, then it just remains on paper. And I wish that the government had spent more energy in terms of helping farmer improve productivity.
In case the international prices come down, and at that stage, if the Indian spinners have to pay the MSP, I think that's going to be a little difficult for the spinner to, how they will be competing in the international market. Two, in case the intention is to support the farmer so that more and more crop increase keeps on coming even in the years to come, I think the best solution possible seems to be that the direct transfer to the farmer, where the farmer gets an advantage of the higher MSP. At the same time, the industry is not losing because of paying artificial price, which will be much higher than the international price. So in case this kind of mechanism happens, I don't think then this will be really a big issue to the industry.
All right, those of course are varied comments and takes coming in on the MSP hike. Some corporates feel that it is going to change their input policy and the prices, but for others, they say the hike is not too much and it's seldom that you actually see market prices coming there. But that's one part of it. The Indian government's move to empower its banking system with an insolvency and bankruptcy code has won recognition at the annual GRR Awards organized by the Global Restructuring Review. The well-deserved award for most improved jurisdiction was given to India. The award, according to the GRR committee, celebrates India's progress in the sector. But with that, let's skip on a short break. Ashish Shah of Sushil Finance will join us with his commodity trading strategies on the other side. Welcome back. And while, of course, the MSP has the top talking point in the day-to-day, there has been a lot of action in the global commodities as well. We have seen the metal prices, for one, come off their lows. And this is after China gave out statements that they would not want to have the Chinese yuan depreciate any further. Remember, it was yesterday that we saw the Chinese yuan hit the lowest level in 11 months. But with the China central bank assurance coming in, there is some support that is back in case of the metal prices there. Also, yet another thing that's bothering the space is that nearly $35 billion worth of goods will start attracting tariff from US, and that is something that the markets see as a beginning of a tariff war. China has said that it will retaliate, and you have similar statements come in from Mexico, Canada, and the European Union as well. So it would be interesting to see on what really is set to kicking on the July 6th. So as of now, a couple of things that the markets are following, but we have seen some buying on the lower side in case of the metal sector. Ashish Shah of Sushil Finance is now with us to talk about the same. Ashish, hi. What is your sense on the metal space? A very sharp sell-off is what we've seen in the last couple of weeks. Buying on dips is what we saw today, though. How are you treating the sector?
So, yes, definitely. If you're talking about the industrial metal space, most of the sectors have been heavily sold off. I think also markets are a little skeptical ahead of the US holiday, which is today, and also the non-farm payrolls and the Fed minutes, which are likely to be released on Thursday and Friday. So a lot of action will be expected tomorrow and on Friday. But as far as today is concerned, the market is going to remain a little lackluster. Whatever reaction has happened is because of the yesterday closing. I think yet base metals continue to remain on a sell strategy for me. So I think copper and zinc, as far as the industrial metals are concerned, both these commodities can be sold. On copper, I'm looking at a target of about 435 to 438 on the lower side, with a stop loss above 448 from current levels.
How are you looking at the gold and silver prices? Because with the kind of declines that we saw in last couple of sessions, there is an improvement here as well. Some buying, especially for silver. The US dollar is clearly taking a pause, but the global international markets, for that sense, are no better. Would you say it is just accumulation on the lower levels? And if that is yes, then do you see it sustaining?
So as far as amongst the gold and silver pact is concerned, yes, silver definitely seems to be like a commodity which can be bought at current levels as well as dips. But yet I'm not very sure as far as the gold prices are concerned, because I think maybe it's just a short covering ahead of the US holiday, and also maybe markets are awaiting the non-farm payroll data to see where is going to be the next direction for the US dollar, and the gold will accordingly take a move. As far as the CFTC reports are concerned, I think most of the longs in gold have exited positions, so there is a net building on the short side is what is going to probably give an outlook in the coming few days. So I think gold for me at current levels is not a buy. I would recommend selling on rallies with a stop loss about 30,750 and put a target of around 30,400 on the lower side. But yes, 30,200 is a very strong support. So as long as it does not close below that, I don't see a major sell-off coming. But on a close below 3,200 on this week, it will be a big selling point for most of the bear positions.
All right, Ashish, we'll keep an eye on all of those levels that you've just pointed out, especially in case of the metal space. But with that, that's all the time that we have on this edition of Closing Bell. After the bell comes up next.